Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Edward Landsman. He's a Senior Investment Consultant over at Portfolio Evaluations. We're going to focus on trends and challenges in the retirement industry. Thank you so much for joining us from the Game Forum today. And give us an update on the current state of the retirement industry.
Yeah, Jill, so we're seeing three big trends happening in the retirement space. The first one is the continued growth in 401k assets. So those assets today are at around $7 trillion. So they've grown from about $3 trillion going back to early 2000s. So 401k assets as an asset class of investors have become a very, very significant class of asset owners in the industry. The second big trend we're seeing is the continued decline in defined benefit plans. So those plans are very, very expensive for companies to maintain. So we're not seeing any new defined benefit plans being opened up, and the plans that are in existence are being frozen, so no new employees are entering those plans. And I would say the third big trend that we're seeing is that we're seeing a shift away in the retirement industry, move away from products, investment products, and towards investment solutions. So that's a shift that's actually driving the 401k assets and the growth in those asset classes.
So a product would have been a defined benefit plan, and solutions are what's a 401k?
That's exactly right. So a product would have been a defined benefit plan or a set of investment asset classes, so a set of mutual funds, and we're moving towards solutions that are meant to get you to the point of retirement as an all-in-one solution.
So what does the landscape look like in the next 3 to 5 years? What's the retirement community working on right now?
Yeah, I think one of the big trends that we're seeing is that there is a shift away from just thinking about asset accumulation to actually thinking about accumulation and decumulation. So in the past, the goal of a retirement plan was to build up as big of a pool of assets as possible towards the age of 65 when someone retires. The goal of a lot of the companies today is to actually think about moving those participants through retirement, so the 30 to 40 years that someone spends in retirement, so thinking about decumulation in the plans. What does that mean? So in the past, we've thought about annuities and incorporating annuities into retirement plans and trying to think about how annuities can generate what's known as retirement income for life. So there's a lot of talk and discussions in the industry about how to construct those products to help someone through retirement and not just to get them to the point of retirement.
What are some of the challenges that you're facing?
Yeah, I think the biggest challenges that we're seeing for a lot of our institutional clients, so pension plans, endowments, and foundations, is that by law they have to disclose what they expect the markets to do in the future. So thinking forward 10 to 15 years, they actually have to come up with an expected rate of return that they're trying to meet. So in the past, we looked at equity market returns of somewhere between 8 and 10%, fixed income returns on the order of 5 to 6%. So when you put together a balanced portfolio of a 60-40 like portfolio, you expect a return of about 8%. When you look at what the markets are telling us today, equities are expected to generate returns of about 6 to 7%. Bonds, as you know, are touching all-time lows. So when you put together a 60-40 portfolio, we're trying to get to about 5 to 6%. So the 6% of today is actually the old 8% going back 10 to 15 years. So a lot of our institutional clients are really struggling to try to come up with that 7 to 8% when the market's only offering 6% today.
And until interest rate policy changes, that's going to be the case.
That's going to be the case going out 10 to 15 years, unfortunately.
All right, thank you so much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.